The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. And we have our first caller. This is a good thing. We have a caller from Stephen in Princeton, New Jersey, hopefully out there on Mount Lucas Road. Are you there, Stephen?
Yes, speaking from Commodities Corporation headquarters.
Yes, that's where I used to live out there at the dormitory during part of 84 and 85, so I enjoyed it. I enjoyed it very much.
Yeah, I'm very well familiar with it. I had a question. I think you mentioned yesterday that you had a personal acquaintance with Russell Wassendorf. And
yes, very much so.
Maybe you could elaborate about that and maybe give us insight into his character and maybe what's going on.
I would be happy to. Actually, Stephen, you must be psychic because that's how I was going to start the show. I first met Russell back in 1975, and I believe it was 1970. That's when the CFTC first started, 1975. I think my number is number 57. No, 75, I think, because it was 1975. And I've been a member ever since, and I've known him for quite a while. I knew his son, Wally. I always thought, and I still think, that the guy was an upright, straight shooter. I don't know what's happened. There's a lot of questions that have to be answered, but I spoke to Ed Dobson both Monday and Tuesday, and, Ed sold Traders Press to Wassendorf, and that was, several years ago, and he was in shock just like I was. I really find it hard to believe. First of all, attempted suicide is always a big question mark. And the second thing is that he had been very philanthropic through the years, and I know these last few years they said he's been taking money out of it. I don't know what the reasoning would be behind this. I'm still in a state of shock. I'm hurt quite a bit by this from several different angles, but with Traders Press, going out of business, they published my books with the exception of the two that I've written for Wiley. So I'm still in a state of shock, and I would like to tell all of our listeners that if you have a commodities account or even a Forex account, you must be very careful who you have these with. Now, if you have a commodities account, the two things that you would like to have maximum security is to make sure that you have a clearing broker. This is one of the clearing members of the Chicago Mercantile Exchange. PFG was not a clearing broker. They were associated broker. And so you really have to have a clearing broker behind you. And the second thing is, if it happens to be a listed stock on the New York Stock Exchange or the American Stock Exchange or the NASDAQ, then I would certainly, go with that. Ameritrade is part of, has bought out Thinkorswim, so if you're trading through that platform, you're probably, you're probably pretty safe if you have a clearing broker through that. That's what I would tell you to do. But I'm going to go into this later on in the show about where I think we are in the cycle. But I'm really in a state of shock, Russell. I have been since Monday. I knew it before the news was hitting because I had friends in Cedar Rapids, and in fact, I don't know if you know this, but Russell had been in Fairfield, Iowa for quite a while, and that's where there's a transcendental meditation group there with one of the guys from India, in fact, more than one, and that he spent a great deal of time there. So he was very into the metaphysical things of honesty and goodness and stuff like that. That's why when I heard it, I just the first thing I did was I called Ed Dobson. And then I talked to John Hill in Henderson, who was one of my mentors, and he knew Russell very well also. But Russell published my very first Gartley article in 1976. I remember it vividly, but I'm still in a state of shock. I don't know.
It seems like a few years ago he moved the operation PFG Best from Chicago and built a new headquarters in Iowa.
Yeah, three-story glass building. Yes, he did.
Right. I don't know if that was in Cedar Falls or...
Yes, it was in Cedar Falls.
And apparently he had some kind of messianic ideas. I think maybe it had to do partially with the... I'm not quite sure, but some religious viewpoints he had, and that's why he wanted to bring his corporation to back to Iowa, which was his hometown, I understand.
Yes. Mm-hmm.
And so I don't know. He may just have been kind of overconfident that he had the, vision to be able to see into the future, and maybe he just got in over his head.
Yeah, there's something like that. Everybody goes through things in their life like that. Jesse Livermore, had many, many ups and downs through his years, and then when he finally took his own life in 1940 in New York, he still had quite a bit of money left, even though he had filed bankruptcy right before that, because he had tired of trading. He was actually, well, it's a long story, but he was in love with a 20-year-old showgirl, and it really messed up his it messed up his mind. And when you're 56 in love with a 19-year-old, those are not good odds.
You're right.
But people change. I've gone through a whole bunch of changes too. But this one really floored me. I'll tell you.
Yeah.
I wasn't shocked when Refco went under. I was shocked when MF Global went under, because this was a listed company and supposedly run by someone who knew what they were doing. So that's it. But what it looks like, just reading from what I've read and heard from people in Cedar Falls, is that he basically has just taken the money. I mean, he's just
hopefully he gave it all away to good causes.
He did have a lot of yeah, he had a lot of philanthropic interests. That I know for sure, because I had helped on a couple of them, and in a small way. But it's really shocking. You got to be real careful where your money is this day. So like I'm telling the listeners here, make sure if you have a commodity account that you have a clearing member. That means they're a member of the Chicago Mercantile Exchange as a clearing member. And what that means is that when the trades are cleared each day, they have to go in and do the calculation. Now this is what MF Global was. They were a clearing member, and yet the Merc did not. This is where the Merc dropped the ball. See, the Merc should have been on top of this first, and then right behind them should have been the CFTC. When that Gary Gensler comes on, he is worse than watching Tim Conway, and I love Tim Conway as a comedian, but Gensler he's a joke. He shouldn't even have that job. He has no idea of what he's doing. I mean, they have to have some way of, and they have the ability to do this. I don't know if any of you folks are a member of the NFA or the CFTC, but they come to your office once every 2 years, and they stay 5 days. Now, when they come to Arizona, they don't stay in a 3-star hotel. They stay in the 5-star hotel about a mile away from where I live, and they stay here 5 days, and there's 3 of them. So you figure it out. It's going to be $25,000 to $30,000 for them to make this trip out here, including the salaries and travel stuff. And it's a flat out joke. And what they do, they fine me $100 because I didn't file one report. I mean, give me a break.
Yeah, well, I think after MF Global, in the months since then, I think they've tried, instead of just taking the word for people who say we have such and such amount of money in the bank, that they actually require electronic connection to the bank accounts themselves. And I think it seems like the regulators were breathing down Wassendorf's neck in last week, and then he decided he couldn't take it anymore. That's what it seems like. So in any case, hopefully he gave the money all to needy causes, and the account holders will be able to write it off as a charitable deduction. So I'll let you go.
Okay, thanks for calling in, Stephen. Okay. And I certainly brought back a lot of memories when I saw Princeton, New Jersey there, because that's a really beautiful place. Okay, folks, we need to get to business here. And one of the things that I want to talk about today is where we are in this financial cycle. Those of you that have been listening for quite some time here over the last few years, I've been talking about the banking problem that we've had, and I've equated it to what happened in 1837. That was the banking panic of 1837 that lasted through 1846. This was the time of Andrew Jackson and a few other dudes, but the main thing that I looked at was cycles. And what I'm going to do is I'm going to put into Tiger TV the long-term, weekly chart of the cash S&P going back to 2005, and it shows how the high came in there in 2008. And if you'll take a look, you'll see a yellow circle there. That was August the 15th of 2007. I remember that date very well because Tom and I were doing a radio show, and I was in Las Vegas playing in a poker tournament, and the Dow was down 450 points, and the Russell was actually up on the day. And Tom and I both thought that was going to be a pretty good spot. And in the last hour of trading, the Dow rallied about 300 points. That was only the second day that Skype has ever been down, was that August 15th date. That date, cycle-wise, we had 8 different, as I recall, I think it was 6 or 8 different planetary combinations that were very similar to what happened on December of 1974, where we had multiple places of conjunctions and oppositions. And I told Tom, I said after if we broke that low, I thought we would be taking out the low, from 2005 and 2004, which we in fact did, and we would be in a bear market for at least 8 to 10 years. And we went down into 2009, which was the mother of all bottoms. And that was a pretty easy one to see because we had a 3-drive pattern, and we had many of the astro things coming together at that time, but nothing was bigger than the one on August the 15th, 2007. And so that's why, and we've really gone above it just for a few weeks on the S&P. And also the Nasdaq has actually made a higher high, but the S&P certainly hasn't. So this is why I'm looking at these cycles, and we've only had in the number of years that I've been looking at that we go back to 18, right after the Civil War. But the history of the 1837 level, it was a banking scandal, folks. It was all about crooked bankers. And if we ever looking at a cycle that goes back 160 years, this is 170 years, this is what we're looking at. I mean, we're looking at people that are trying to fix the LIBOR rate, the London Interbank Offered Rate. I mean, give me a break. That's like trying to fix a London Gold Fix. And they call it a fix for an obvious reason. No one uses it anymore, but that's what it used to be called. Now, we have many other things. We've had several, we've had Revco go bankrupt, we had MF Global go bankrupt, Lehman Brothers go bankrupt, Bear Stearns get taken over for $4 a share, and we've got some other probable banks in the United States and also in Europe. So this thing is becoming more and more like this is what is going to happen. I think that the piper is going to be coming to the cash register at the end of July here, early August, because that's when the Bradley model begins to turn down, and that's what we're looking at. Remember that the Bradley model is nothing more than looking at positive or negative energy on the cycles. That's all it is. It's really nothing more than that. So we want to be watching it closely. I can't believe the break is here already. 877-927-6648 if you have any questions.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, and we have a call from Denver, Colorado. Are you there, Fred?
Yes, I am, Larry. Thanks for taking my call.
My pleasure.
I had a
what
question.
can I do for
When
you?
I got on your show this morning, looked at it, you had a chart for the Russell 2000, and then I didn't hear very much about the Russell 2000, but I'm very interested in finding out what you think the next month might hold in terms of warning signs for it going down.
Okay, if we take out the low that we had on the new moon of the 19th, then I would expect that we're probably going to go lower than where we are now. But I think we're going to hold that low, and we have a chance if we can stay in this area between where we're trading now and the highs that we made on the full moon of July 3rd into the end of July. Then I think that's going to put out a really nice sell signal. Now, if you'll take a quick look on that chart that I posted for the Russell, you'll see that it made a 5-wave reversal way up at the top, where each wave it's called a broadening triangle by Gartley, but other people have called it the same. It's a reverse point wave. Was named by Wells Wilder, but it's nothing more than an expanding triangle is what it is, and it's one of the most bearish patterns at the top and one of the most bullish patterns at the bottom, and that has completed up at that level. So all I'm waiting for is the time frame, because the Bradley model has served us relatively well here for the past few months, and so and it turns really negative, starting around the 1st of August. So I just want to see where the market is at that time. In fact, we're at the 11th of July today, so we've got another 10 trading days here in the month, and then we're going to be really close to the spot where we're going to be looking at it, and that's where I think the piper is going to go to the cash register, and that's what we'll have to wait and see. But that's what I'm waiting for is that July area, to see what's going to happen at the end of July, 1st of August.
Okay, do you see anything with QE3 coming out and the speculation that they're going to have to do that, maybe putting this off a month?
I don't know if it'll put it off a month, but QE1 and QE2 didn't do much to help the economy. The stock market, and the stock market has done very little. It's just had some big swings. And frankly, I believe the Bradley model better than any economist or anybody else, the Fed or whatever, because given the history of what it's done and what it's predicted, it's done better than anybody else. And so that's what I have to rely on. It's far from perfect, of course. But it is saying that we're going to be down, for the rest of the year from August on. So that's what my game plan is going to be.
Okay, Larry, I really appreciate it. Thank you.
Okay, thanks for calling in, Fred. And we have another caller from Garrow in Orange County. I think you're the gentleman that had the stocks for the oil or for the natural gas holders. Is that it?
No, sir. I had CMI. I always trade CMI.
Oh, CMI. Okay, yeah.
Yeah. Still, I'm short in it. I make a living out of that CMI. That is my only stock. But I thank you very much, Larry, for taking my call. I appreciate for all the knowledge that you teach us. I'm concerned about that Bradley model. I tried to learn, and even I went to YouTube. There is nothing there. I want to know, what is Bradley model? Is it a chart? Is it numbers? And where I can download it and how I can learn about it, sir?
Okay, Donald Bradley wrote a book in 1947 called the oh dear, I can't even remember what it was called. Wow. Okay, I'll think of it in a second. Anyway, it was the model basically looks at all the different cycles of the 10 planets, and he gave them each of them a weight. The weight came from Princeton University, one of the professors there, on how whether the planet was either positive or negative, Mercury, Venus, Mars, whatever, and each of those have a date. In other words, Mercury has 88 days. Venus has 255 days, so each of these days has either a positive or negative bias, and then he made it into a graph, and it has a pretty good idea of predicting of where the stock market should be either bullish or bearish during that time. That's all it is a prediction. It's far from perfect, but it's usually right about 75% of the time, and that's what it is. It's a very complex formula to figure out, but it can be done. And what it's doing now is it's showing that we have an upward bias until we get to the 1st of August, and then after that it begins to turn down. The name of the book was Stock Market Prediction. As a matter of fact, someone was kind enough to put in the Tiger Den, the link to it, and I think you can find the book there.
Very good. Thank you, sir.
Okay, thanks for calling in. Okay, we've got to take a quick break. I cannot believe that we're at the halfway mark. 877-927-6648.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his Market Take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks. And by the way, everybody send out some prayers to the Wassendorf family. I mean, he had family, friends, and children and stuff, and I'm sure they're going through hell. So nobody deserves to go through any pain, but anyway, that's just my feeling on it. You got to have a little bit of forgiveness. By the way, when I talk about these things like the Bradley model and these patterns that I look at, remember that this is coming from an opinion from one person, and I'm Italian. And don't forget what Aristotle said when he was talking about Italians. He says, "What do you call it when an Italian has one arm shorter than another?" And that's a speech impediment, and that's what I have. So be careful of everything that I say. You have to prove it to yourself, and it's basically you're responsible for your trades that you put on, and that's what we're looking at. Those of you that did buy the TBT on Monday's show, it's underwater by just a tiny little bit, and I still think it's still good. The bonds have to get above that 152 level. for it to not actually work very well. So this is my comment for today. Now we have an interesting situation going on in the gold market. We've had these bottoms formed at the 786 level 3 different times. We tested it again yesterday, and we tested it again today. So this level at this 1564, is very important. That's only $12 from where it is now. So you have to be be very wary, because if the gold goes below that 1550 level, that's going to really signal something, I think, rather ominous. Right now, the commodity, the crude oil and some of the others are holding up well, and we'll cover that on the show for tomorrow. But that's what my opinion is I just don't want to be long gold if it goes below 1550. Right now, it still looks okay, and so 1550 is the line in the sand, as near as I can tell that is as the way I see it anyway. And remember, again, that is my opinion of what we're looking at. So the next one that I want to talk about, and I know it's a commodity, but it's important enough because it's our largest commodity that we have, and that is the corn market. And we had one of the most bullish corn reports ever today, with the USDA coming out and saying the corn crop was as bad as it's been in almost 40 years, 1974, and I remember that very, very well. And corn has basically given up all of its gains and actually went below the previous day's close for a little bit. So this is it's a sign that's not responding to good news. And like Basil mentioned on his program, that it is not the time to be buying corn. If you're long the corn, the time to buy it when it was $5 a bushel, not when it's $7.40 a bushel. So use some common sense. One of the things that they mentioned on the show, I was listening to it, was the fact that we had an ETF called corn, and a person commented about the gaps in the ETF. Well, ETFs trade on regular trading hours. They don't trade electronically, and so you don't get the overnight swings or the Asian swings or the London swings of the market. You have to use the Z symbol. That's the electronic symbol. And it will give you the overnight trading in corn. And corn trades very nicely all through the night. And it is, very, very, it's a really great thing to trade, because it's one of the larger of all the commodities that we have. Treasury bonds being by far the largest. So just remember, these ETFs, they leave gaps because they don't see exactly what the commodities are doing. This is true of the DBA. I'll cover more of this on tomorrow's show for sure, but this is a comment that I wanted to make, because I wanted to try to be clear on that to let the folks know that this is what what we're watching when we're doing these things. Now, I think it's important that we talk about the euro here, because we've made new lows, and we're heading down into this area, getting close to that. We've taken out the lows of last week. And, we are, still going down, and it looks to me like we're heading towards that 117, to 115 level in the euro when you look at this, on a long-term basis. Now, short-term, we could get a bounce, at any time. And the reason for that is the fact that this U.S. dollar index that we watch, and it's one of, King Dollar's favorite, is very important when you're watching this, because it is 53% of what the euro does, but there's other cross rates in this thing, so you have to be really observant of what's going on at that time. So that's what we're looking at, and we want to be able to see how some of these are going to unfold as we get closer. I'm trying to technically do this and talk at the same time, and an Italian trying to talk and do things at the same time is like trying to chew gum at the same time. Okay, now we have an AB equals CD pattern forming in the dollar index, and it's completed up here at this 50. At this 83.50 level. Now we did have an interesting phenomenon here. We did take the highs out from June 1st at 83.67. We took that out by just a few pennies today, and it didn't go charging ahead. So the high today was 83.69. So we took out the highs of May by just 2 cents in the dollar index. So that's not very much of a powerful move. So this could be the reason for a possibility of able to see a move down in the dollar index, at least for short term. But longer term, the dollar index looks like it wants to go higher. The euro wants it to look lower. Okay, we've got a call from Mark in Massachusetts. Are you there, Mark?
I am, Larry. Good afternoon to you.
What can I do for you?
I have a very quick question in reference to what does your Bradley model say will happen in the market over the next week and a half to 2 weeks? Are we just going to be basically in a small trading range where we spike up or spike down? What's your take on the next several weeks? And then I have a dollar comment on after that.
Okay, your answer to the Bradley model is yes, maybe, and possibly.
Okay.
But it's really, I don't really know, because I have to wait until we get to that point, because we could sell off into that and it could change everything, and it could potentially set up a bullish scenario for several months. But the way that it's looking technically, the fact that we've got this wide trading bar, trading range, from the lows that we made just not too long ago, back in June. And then we had the rally into July, so we have a very wide trading band. And if we can just go sideways to up a little bit into July, that would be the ideal situation. Now here I'm trying to forecast with a little anticipation, but I'm assuming something. You know how you spell assume. You don't want to make an ass out of you or ass out of me. So I'm just trying to wait until that time. That's what I'm trying to do. Okay,
so it's basically a wait and see. With no indication what's going to happen over the next week.
Yeah, there's nice little trades in between. It makes beautiful patterns on the hourly and stuff like that. But the real money, if this is correct, is going to be made from August through the end of the year, because it has such a negative bias, and it's been fitting very nicely. So this is what my strategy is based on. This is I'm waiting until see what happens at the end of July, early August.
Okay, my dollar question, thank you for answering that. My dollar comment is, and I agree both with you and Tom that the dollar overall is going up. But I heard an interesting comment a couple of mornings ago on Bloomberg, where they talked about the dollar against some of the smaller currency, and they referenced basically the Canadian dollar and the Australian dollar. And they said, we continue to be very weak against those two currencies. They mentioned one other one, which I forget. But they specifically said the Canadian dollar and the Australian dollar, and I just thought that was very interesting in reference to the dollar in general.
Well, I think it's absolutely important, and it's actually imperative if you trade foreign currencies, is the fact that you have to watch these different cross rates, because the dollar index itself is 53% of the euro, and so really you have to look at the others, and all of these trade differently, because each one of them that's why Forex is so much fun to trade, is because it's different, and every country has its own economic assets and problems and stuff. So that's why it's important, and I watch the 6 major cross rates, and I think it's important to keep in mind on that.
Yeah. Okay, Larry. Thank you so much.
Thank you for calling in, Mark. I appreciate it. Yes.
All right.
Okay, since we were talking about Forex, I want to talk about the safety of Forex banks, because I know Forex has become very, very popular here over the last many years. And really now, remember now, Forex banks are private banks. They are not under the auspices of the NFA, the National Futures Association, or the CFTC, Commodity Futures Trading Commission, or the SEC. They are private. They do have a little bit of leeway in there, but frankly, they can do almost whatever they want to do. Their reporting is different than almost every one of them, because they're all private banks, with the exception of Deutsche Bank and Citibank and places like that. But you have to have more than $1 million to be in there in trading Forex in those larger banks, and I know most of the listeners know doing that. So if you have a Forex account, make sure it's with one of the larger private Forex banks, and that you know a little bit about the background of these people. But frankly, it comes down to a crapshoot, folks. That's the bottom line. So just remember that the safety of the thing is what's really important. One of the things to watch for is that if you order money out of your account and the money is slow in getting to you, like a day or two, and it's like the wiring, and then they give you some excuses that well, we didn't get the wire out on time. I mean, take it all out, because that means that they're having trouble. And that's my opinion, but keep in mind that it is my opinion, and that's the important thing to remember. Okay, we need to go. Oh boy, this day goes really fast, and today I have the webinar that's coming on at 6:30 this evening, and I spent a great deal of time preparing for that. By the way, folks, that's probably going to be one of my last webinars that I do. I think it's about time for the old cowboy to bring in the reins a little bit into the corral and start enjoying a little bit more life, and because it takes me a long time to prepare one of these things, and I enjoy it. But it does take a lot of work, and with all of the stuff I've had to go through since Monday, it has not been a really fun 3 days. But I'm really looking forward to tonight. We're going to talk a little bit about the Treasury bond market now, because we went above the 61% retracement, and this is what we're assuming now, that it's going to make it up to this 151.10 level, which is the 786 retracement. And that's where we will be looking, to put on the major short. I think this is the major top in the bonds, and this is the rally back that we've been waiting for. But if the proverbial stuff hits the fan, maybe these bonds will go to 160 like Tom thinks they could. I mean, you have negative interest rates in France already, and so it looks like it's going to be very, very interesting, because we had negative interest rates in Japan a few years ago, and I think they're near zero already. So this is something else that is probably going to come into the equation. But these are basically, it's a crooked banking thing based on the cycles that I've been looking at, and that's the premise of what I've based all of this on, over the years. So this is the whole thing of what we've been looking at now. We want to take a look here at the NASDAQ, because the NASDAQ has been the really strongest of all the things, and we've got a big cycle coming in here on the 19th, which is not too far away. It's a week from today, and we're almost exactly at the 61% retracement. In fact, I think we hit it exactly today, and we're trading just a little above there right now. And so as long as the market doesn't totally collapse from this level, that would be around, the S&P would have to get below 1328 before it would break down. But the actual holding of the NASDAQ at this particular point in time has been, very, very important. We made the high back on the full moon of the 3rd, and we've been down every day ever since. And so what we're looking at now is for the market, potentially, have a rally. But the NASDAQ has been the leader by far, and it has held the patterns. We've got now, with this bottom holds today, we've had 3 higher bottoms, and this would give us a chance to move one more time up into the next couple of weeks, and that's the ideal situation of what we're looking for. And, this is my opinion, of course. Then there we go with the opinions again, but that's what we're looking at on a shorter term basis. This is very similar to what's happening with the Russell and the Dow Jones and the S&P, but the NASDAQ has been the leader all along, and so we've been able to watch it relatively closely. Now, someone asked a question about silver, and my opinion on silver has not changed at all. I believe as long as we can hold this $26, actually it's around $25 per ounce in silver, silver has a chance to rally. I mean, on a weekly basis, we've been down so many weeks in a row. We finally have gone sideways with a very slight bias to the upside. So anyway, we're going to take a little break here, and we'll be back, 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Just like that, another month has passed, and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar, courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar, courtesy of Great Panther Silver and TFNN. Thanks so much, and good trading.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks. And one of the first charts that I put into Tiger TV today was the Apple chart, because yesterday it made a perfect 786 retracement off the big high. And that was also coming off of that ABCD buy down there at the 530 level. Now, the next thing to look at, we have the next earnings, I believe, in Apple are around the 24th. And so you want to see, as long as Apple doesn't exceed that 786 at $617 a share, it has a downward bias, in my opinion. Now, the last thing I want to talk about here is, because it's very important what's going on today in the commodity markets. Just since I've been on the air, corn has dropped 25 cents a bushel. That's $1,250. Today's high was an exact 1.27 off of the high from August of 2011. if you take a chance to look at that, you'll see that swing measured exactly to $7.48 a bushel, and we backed off more than 44 cents a bushel, which is $2,000 in a matter of a few hours here. So this is the reason why these numbers work pretty well. If you have a chance to listen to the webinar today, I'm going to really cover, why these things work. I've decided, to make it fun for everyone, and I hope it turns out as good as I'd hope. But this is a really very, very negative sign in corn, folks, because, in fact, all of the grains, because we have a situation that we've had the most bullish reports that we've had since 1974. And that means that, the crops have been very bad, but, the prices have been telling us that for a month. And now probably the end of the game is probably here right now. As a matter of fact, with a 40-cent move in a matter of an hour or two, I would guess that this would be something that we would be, really be highly probable that this is what happens. Now, you can't sell it here, but what you would want to watch for now is to watch for a nice little Gartley pullback in the corn, and we'll be watching that on a half-hour basis. That's what we do for the hedge fund, is we watch after we think the top is in, we'll go back and we'll look at the half-hour chart, much like we're looking at in bonds. We're looking at the bonds to possibly get to that, 150, 110, or 12. It's only 10 or 12 ticks away from that. So if it gets to that point, that's where we will put our order in, and then we put our stop above the high. So that's the second thing. Now, to finish up the show today, I want to finish it up on the safety note that we talked about when we first began our talk with Russell from Princeton, and that is the safety of your account. Make sure if you have a commodity account that you have a clearing broker. That means a clearing member of the Chicago Mercantile Exchange, not an associate member. Also, if a stock is listed, like Ameritrade for Thinkorswim or Interactive Brokers, Interactive Brokers I think is one of the more stable of the firms. So that's it, folks. Everybody have a wonderful day, and I hope everyone keeps everybody in their prayers, especially the Wassendorf family. May God bless.